Hi Rahul, thanks for being here on Business Plus this evening. Talk to us about US bond yields, the pressure on the Indian rupee, and potential outflow of money from Indian markets into the US Treasury bonds. How are you seeing this entire story pan out for Indian markets?
Thank you for having me, and apologies for being late for this interaction. So I think just taking forward from what you guys were discussing, I think when you look at the U.S. economy, that is as strong as it is. I think if you look at the last couple of data points from the housing side as well, the pending
Yep.
and new home sales data, which you guys were discussing in terms of the U.S. GDP numbers, the jobless claims numbers. I mean, it's ridiculous that the U.S. economy should have been deep into a recession by now, but it's showing its fastest growth rate in close to 2 years. And this extends to the manufacturing side. I mean, I'm sure you guys saw the durable goods print that came out overnight. The expectation was for a 1.5% gain, and it grew by about 4.5%. So I think what's happening is when you have an economy like the US that's growing at about almost nearly 5% annualized, it is only natural that you would probably take money out of other markets and put it into the US markets. And I think to that extent, you're seeing the kind of outflows, not just in the cash markets, but you're even seeing that in the derivatives markets in
Right.
India. That's not to say that the India story is over. I think what we saw in the early part of this week was very welcome in terms of a correction, and I was hoping there was some more room to go for it. But you know, given that mortgage rates are where they are, given that yields are where they are, the U.S. economy is still going from strength to strength. So, as on a lighter note, capital watch out. I think everyone in the world, including developed markets, are now competing for it.
Yeah, so capital watch out and potential flight of capital, direct impact on Indian markets. What is your sort of horizon? How long should one wait and watch? And when would it be safe to assume that, okay, we've hit the peak of US bond yields, we've hit the peak of whatever capital outflow had to happen, has happened, markets have factored in all possibilities. How long do you see this horizon, this runway?
So I think the good part is that you do have a counterbalancing force in terms of domestic flows, right? I don't think we're in that situation where we were pre-demonetization, where FII flows was so relevant because the size of the domestic mutual fund industry and the DIs was very, very small. Today,
Right.
the size of the mutual fund industry is about 40 lakh crores, right? So even if they're sitting on aggregate of, let's say half of that is equities, which is about 20 lakh crores, even if they're sitting on about 5% cash, that's 1 lakh crores of cash at any point in time that just mutual funds are sitting on. Add to that insurance companies, LIC, AIFs, PMSs, etc.
Right.
You probably have close to about 2 lakh crores of cash sitting on, that you're sitting on at any point. So I don't think the Indian markets are going to crash. That is potentially ruled out. I think
Okay, let's
Russia,
not call it a
Ukraine,
crash, but any further correction?
yeah.
Is there a correction that you are estimating, a number that you want to put to that correction?
No, so I think the way to look at it is I think it's purely academic to discuss a headline number for the index. But I think let's look at the early part of this week. If you exclude today,
Yeah,
stocks had come off 15-20%, right? So
right.
if I'm a holder and I was not able to justify stocks at price X, at price X minus 15% or 20%, I may choose to go in and buy. So my sense is, in a worst case on current evidence, 18 and a half thousand could be a reasonable floor on the Nifty. I'm not saying it'll head there, but that could be a reasonable floor. That being said, I still think there is room for valuations to reset on the way down. But like I said, I'm not calling for a major correction, just given the fact that domestic liquidity is still as strong as it is. But hey, if your price comes through, please go in and buy the stocks by all means.
Okay, and US FOMC slated, I think, for October 31st, this Tuesday. Rahul, what are you expecting? I think there's a very clear understanding that perhaps this could be the pause in the cycle before one more hike next month. But then there are some views also coming in that perhaps US Fed may actually go in for one more rate hike this month itself. Which side of the curve are you on?
So honestly, I believe the discourse has moved beyond that.
Okay.
I think we are is sitting in a regime where we accept, understand, and to some extent live with the fact that rates are going to be higher for longer. At our own firm, my economist does not expect a rate cut either by the Fed or by the Reserve Bank of India till the end of the first quarter of the next calendar year. So we're talking about somewhere around March, April of next year. So I think somewhere that has been factored into the bond yields in India, so also in the United States. But like I said, I think if you're going to get growth rates like, let's say, the Indian economy grows between 6.5, 7%, and the US continues to grow at an annualized rate of 4, 5%, people are going to be paying for growth. And I think to that extent, if capital continues to move out of China, I think the US and India could be very significant beneficiaries
Okay.
of the
And
same. So I wouldn't be too fussed. I think obviously if we were having this, but I think it's purely academic now whether they're on hold or they go in for another 25 basis points because. As you remember, just not even 24 to 48 hours back, central banks in the European region have started to hold.
I
So
was just going to
even if
come to
you hold,
that.
I think the market is sort of moved beyond that.
Exactly. So in Europe, again, I think ECB coming out very clearly and stating that it's not going to hike interest rates anymore. At the same time, this whole narrative of Eurozone going into recession, gaining wings, becoming stronger and stronger. Any solid impact that you are expecting on Indian markets with these two different sort of ends of the Atlantic, US continuing to grow, Eurozone going into potential recession. Overall, how are you factoring in the impact on India?
No, so I think the setup of both the continents is extremely different, right? I mean, I'll just go back to the conversation you guys were having before I joined in. I mean, just look at the home sales with mortgage rates where they are in the US. I mean,
Yeah.
does it really matter that interest rates are that high? After all, if you're continuing to see, I mean, I was just reading a tweet recently by Elon Musk. And he said that there are no jobs available in manufacturing. He said, I need people, but I'm not able to find people. That's actually the resilient strength of the US economy. Europe, I think, is on a slightly different wicket. I think they have their own challenges to deal with. I think the kinds of challenges that some of the banking, majors are in Europe, I don't think some of those are as fragile in the US. So I think Europe has its own challenges. India, somewhere in the middle of this, like I said, I think if you're looking at developing markets or emerging markets, and the flight from China continues, I think you don't have an option as an international investor. Maybe Vietnam is one market where we've seen a lot of flows go in. So I think that probably is another market. But I think the two biggest stories for the calendar year 2024 in terms of capital inflows on a relative basis will be the US from the developed markets and India from the emerging markets. That's not to say that flows may not move from India to the US by US fund managers themselves. But I'm saying if I was a third party neutral where I had the whole world to invest, I'd probably pick US and India as my top destinations for developed and developing markets.
Okay, and let's come back to India specifically. Then big numbers today coming in from Maruti Suzuki. Before you joined, Suyash and I were talking about a 24% revenue growth YOY for September quarter and an 80% jump in profits. And we are yet to actually see the Reliance Q2 print, which is expected later today. So talk to us about Maruti Suzuki. Suyash was of the opinion that the stock is overpriced right now, but brokerage calls coming at an even higher valuation, going as high as 11,900 on the Maruti stock. How are you reading into the Maruti numbers?
See, as they say, beauty lies in the eye of the beholder. I see you're wearing a very nice jacket, and I'm sure, if you walked into the store and you really like that jacket that you have on, if the shopkeeper starts at 2,000, 4,000, 5,000, if you have the kind of money to pay for that jacket, you'd buy it, right? So I think, price is a very relative term. What's good for one may not work for the other. Fantastic numbers by Maruti, no question. Not just on the top line, as you mentioned, but I think even if you looked at the operational performance, absolutely remarkable. My only concern is that I fear somewhere that FY24, the current fiscal year, could be the peak in terms of earnings for consumer companies across the board.
Mm-hmm.
Because I still think, and I have a very simple mathematical explanation to this. I mean, for most people that are in financial services that are, say, let's say drawing a salary of 24 lakhs plus, where if you're, at a reasonable position or higher, when you go out for a weekend, you're probably spending about 10,000 rupees if you're doing a proper dinner, movie, a little bit of shopping and all of that, right? So that's about 40,000 rupees on a monthly basis that you're probably spending on entertainment. You annualize that, that's almost about 4.8 lakhs, and then maybe another 6 months of COVID. So you're talking about roughly about 7.5 lakhs of consumption that could have happened in COVID that actually didn't happen. Now, remember the second wave of COVID only ended in June of 2022. So
Yeah.
there is still that amount of savings. When you multiply that into the number of people that would have saved that, I still think to a large part, this is a lot of that savings coming into consumption. And I think a lot of that may exhaust itself by the end of this year. I mean, the kind of marriages that are slated to be happening between now and March, and the commentary that's been coming out from the gold players is just remarkable. I mean, 30% kind of growth, and I was just reading somewhere just between November, December, only in Delhi there are some 3.5 lakh marriages. So I think consumption, we have a World Cup that's currently underway. We've just handed over the presidency of G20. So consumption is going to be fine this year, but my worry is that you're probably going to see the peak of it on most B2C companies. This would include automobiles, it would include consumer staples, it might include consumer discretionary. So
All
fantastic on
right.
Maruti. On these numbers, would I buy the stock? Possibly. But I'd be watching out very closely to watch when the earnings cycle reverses.